And now to our next conversation. The National Pension Commission, talking about PENCOM, recently released guidelines on assessing retirement saving accounts and RSA balance for the payment of equity for residential mortgage. It's aligned with the provisions of the Pension Reform Act, PRA 2014. Well, to give us the nitty-gritty of this all, we have Bajomo, Executive Director, Business Development, Stanbic IBTC Pensions, joining us right here in the studio. Great to have you.
Thank you for having me.
Yeah, so, this has been trending for a while now, ever since the regulation was, put into law. Yeah. But I'm wondering, how exactly, is it going to work from your view? Because I know your Stanbic IBTC pension.
It's going to work really well. This is the attempt of the National Pension Commission to ensure that contributors are able to access mortgage more conveniently. They've saved, a certain or significant amount of money, and the law allows them to take up to 25% of their savings to make a deposit for a residential mortgage. To do that, some of the criteria includes the fact that anyone who is interested in this must have contributed for at least 60 months. Both the employee and employer contribution must have been made for 60 months. You must be an active RSA holder. And the interesting part is a couple could also jointly access a mortgage. In other words, once they have met the criteria, and on either side, they can actually jointly take 25% each of their contributions to purchase a house.
And sometimes I just wonder, okay, after, I'm old and gray, I've used part of my, contributions for equity, yeah, about 25%. Is this going to impact what I get monthly when I'm done working in any way?
It will impact what you get monthly when you're done working, to the point where you've taken 25% of your contributions for the mortgage. But if you look at it from a positive point of view, the asset acquired is also growing. So if, for instance, you had a house before now and you bought another one with your residential mortgage as if you like, an investment property. So at the end of the day, you've done well, you continue to earn rent, or you want to sell and all of that. But the more important part is having access to 25% today, you're still making contributions up until the time that you retire. Right, so the money is still obviously being invested for you, is working for you. You also have a choice to make voluntary contributions into your RSA, in other words, to augment what you're going to be getting in retirement. So you have that opportunity as well. If you go to our pension app or the website, you can see guidance on how to determine, to say in retirement, I'd like to earn X amount of money monthly in retirement, and then you can decide how much you're going to make in voluntary contributions after you might have collected the 25% or before, to augment what you get in retirement. So it would affect it, but you can also determine what you will get in retirement at the end of the day.
It's not like the PFA will tell me, oh, we've bought you the house already.
No,
we can't
you still have
take
a
care
balance.
of you anymore.
No, you still have a balance in your retirement savings account, which you can access in line with normal regulations. So maybe another question somebody will have on their mind is, if I'm taking 25% for mortgage, can I still access 25% lump sum when I do retire? Yes, you can access 25% lump sum when you do retire, and then get the balance. Either you purchase an annuity or you get a program withdrawal, up until death.
All right. So as a holder with Stanbic IBTC, how do I take advantage of this?
As a holder of Stanbic IBTC, to take advantage, you need to get a property or find a property in which you're interested in and get the seller to issue you an offer letter. With your offer letter, you would see a mortgage lender, which could be a bank. And sometimes, there are other mortgage houses that you could access. The National Pension Commission will publish a list of mortgage lenders, approved mortgage lenders, usually licensed by the CBN. I think that would just be the usually licensed by the CBN one. And the second part is they must have participated in the contributory pension scheme to date. In other words, they must have a pension certificate that says they have been contributing. In other words, their employers are also compliant. And when you approach the mortgage lender with your offer letter, they go do the checks, and at the end of the day, they request you to send in your statement. You go to your PFA, that's where Stanbic comes in, and request for your statement, your pension statement, which will indicate you've made contributions and your employer has made contributions for up to 60 months. With that endorsed statement, you go back to the mortgage lender, and then the mortgage lender does, you fill an application form with the mortgage lender, and then they come back to give us all the necessary requirements, which we package and send to PENCOM for approval. Once you get the approval, the rest is history.
You need to make sure whatever property you're buying is actually legit.
No, it has to be legit. So the mortgage lender does all of that work. They go to the verification, check with the state government that it has the right, documents. They go see the real property. So it's not, you cannot collect this money to say, oh, I have a piece of land, I want to develop it. Or I'm already developing a property, and so I need this money to finish it. It has to be for a physical house, and that intermediary, being the mortgage lender, must be involved to ensure that, the money is being used for the purpose for which it is intended.
Quite interesting. But under what other circumstances can I also have access, to the money in my pensions account?
Well, there are different exit routes. One is at retirement, which is the reason the money is there in the first place.
Right.
The other would be when somebody loses their employment, whether you resigned or there was a rationalization in the organization and you needed to leave the organization, then you can access 25% of whatever is sitting in your retirement savings account after 4 months. If you're able to demonstrate that after 4 months you haven't gotten in another employment, then you can access up to 25% of that. Under health grounds being that the person has been declared, if you like, immobile, unable to work, then certain documentations will be required from the health authorities and all of that, then you can access monies, under health grounds. And finally, you could also access monies if you had voluntary contribution and you wanted to access a part of your voluntary contribution. There's a part of the voluntary contribution called the contingent part. You can access that contingent part before retirement.
All right, but is it going to be fast? If this all happens, hope I'm not going to be running from from pillar to post trying to get my money. Am I going to get it in record time?
You will get it in record time. Stanbic IBTC has been paying contributors since about 17 years ago when this started, and we have paid up to 1.2 trillion in retirement benefits since in the last 17 years. We have over 60,000 retirees on our database, and they get their monies as and when due on a monthly basis.
Quite interesting.
We have lots of testimonies.
All right, so what if, getting customer service, can be quite, daunting.
Mm-hmm.
What other channels, can we reach you on?
My favorite channel would be the Stanbic IBTC mobile app. And so if you download the Stanbic IBTC mobile app on your phone, so it's mobile, you could access a varied number of things. So typically clients would like to have their statements as and when due. If you go on the Stanbic IBTC mobile app, you can actually request for a statement and get it in 2 minutes or less in your email, your registered email with the Stanbic IBTC. Of course, on your first page, you see your balance, your mandatory contributions, your voluntary contributions, and your total on the first page. You can, if you wanted to go to the embassy, for instance, you could actually request for a letter to the embassy on the mobile app, and you get that within 2 minutes into your registered email address. If you are one of the people who would rather talk to a human being and want to go to a branch, on the Stanbic IBTC mobile app, you see all of a list of branches by zone, whether you're in the south, southeast. You can just click on which location you're at, and you see all the offices that we have. We have about 30 offices and counting across Nigeria. On the mobile app, you can see all of the newsletters that we've had, so you can educate yourself about, various things about pension. We have different FAQs on the mobile app just to educate yourself. So that would be my go-to, because virtually, if you wanted to apply for your benefits, whether it's 25% or you could actually go to the mobile app and start the process, from the mobile app.
All right.
So that would be my go-to. Of course, we have the email, we have the multilingual call center. So if you're not comfortable with English, we speak 4 other languages: Pidgin, Yoruba, Hausa, and Igbo. And it's a 24-hour-by-7 call center. So whether it's 2 a.m. in the morning or 3 a.m., a human being on the other line to speak with you.
And
we have the pension
self-service.
portal, yes, and all of that. So
my
go-to will be the mobile app.
Okay, I'm going to try and reach out after the program, see if I can get some of my benefits.
Well, you're working.
Thank you so much, Bajomo, Executive Director Business Development, Stanbic IBTC Pensions. Great having you on the program.
Thank you very much.
Thank you.